coming out here. Kevin, the first one I saw coming across the board, GDP 3% for Q2. You know, why'd they do 50 basis point cut if GDP's at 3%?
Yeah, you got to look into the numbers, Tom, and see what, I like the GDP data because it gives you income. I want personal income, I want disposable income, and I want savings. When you see those numbers, maybe what we've seen in the past is those numbers are all declining, right? Income, disposable income, and savings levels are all coming down. If that keeps happening, that's that warning sign. And even though you're right, the world sees a 3% GDP, like what are we doing here? But some of the numbers within those numbers are coming down, Tom.
Yeah.
I'm trying to get the numbers right now. 3% GDP, personal consumption expenditures ticked down a tenth to 2.9%, Tom.
Okay.
So a little bit of an adjustment there. Then let's go to some of the other numbers coming out live. How about durable goods?
Yeah, up 0.5 on durable goods. Forecast was up about 0.1, 0.2%. Previous was minus 0.2%. So some pretty decent numbers on the core durable goods. That's core durable goods up 0.5, Kev.
Yep. Durable goods, that's that volatile number because transportation is such a big part of that.
Yeah.
That's why they take that out in the other numbers because transportation can be, a pretty volatile part of that if one big airline order or one thing like that. So I don't have the jobless claims data yet, Tom.
Yeah, I've got it here, Kev. 218,000 came in below expectations, just 1,000 more than what we had last week. So those numbers on a weekly basis don't really, equate to any stress in the overall job market, Kev.
Another very strong number indicative of a pretty strong labor market, Tom. I'm going to see what bonds are doing here. The 1-minute bond chart, pretty good spike up to 3.79 in the 10-year, Tom. So bonds and notes selling off, yields going a little bit higher, 3.79 on the 10-year. The U.S. dollar, that's also rallied slightly when this number came out. So dollar a little higher, yields a little higher, Tom, based on pretty solid economic data coming out here, 7:30 Chicago time.
Yeah, the durable goods, the headline number, Kevin, I said the core was up 0.5. The headline number was flat, 0%. Forecast was over minus 2.5%, so that's actually better than expected on that headline number. But then you look at continuing claims as far as jobless claims go to 1.83 million. Forecast was just a little bit lower than that. Kevin, when you look at this data, the equity market is actually a little bit stronger here. I'm looking at the S&P 500 futures, but not really any market-moving events here out of this data deluge.
Well, this market is already higher today, Tom, because of what looks like an extension of the AI trade with the Micron news yesterday. So that's going to fuel markets to start today. But the macro, keep your eyes on the macro. The dollar's higher, yields are higher. Remember, durable goods ex transportation up 0.5. It's a pretty significant beat, not only from last month, but from expectations. Labor market strong, and overall GDP still a strong number, Tom. So all the data we're getting today points to higher dollar, higher yields.
Yep. And also, Kev, I think, we've been talking about lagging a little bit in the NASDAQ 100. A lot of these tech names, they're not at their all-time highs, maybe besides Meta platforms. But is that providing the next leg up if NASDAQ continues higher? We're about 2% below those all-time highs in the NASDAQ. We hit those by the end of the week, and then, there doesn't seem like there's any resistance levels here at this point.
Tom, Micron had a pretty nasty run the last couple of weeks, as you know, but this stock is up significantly pre-market. I mean, that stock was down 27% 3 months. It's going to gobble up more than half that on the open today, Tom. So it's going to be a big day. It's fueling some more interest. I mean, all the AI stocks are getting another lift off this. You've got NVIDIA up around, last time I looked, 126. Yeah, over 126. So that is safely through that 120 level now that it jumped up to the other day. So it looks like everything compared to that, in that AI sector is rallying strong today. And that leadership, as you know, it's taken us here, Tom. It's taken us another level higher.
Yeah, Kev, I wanted to get your thoughts real quick here on crude oil before I let you go, because As I mentioned to our other guests earlier in the show, it's like you got geopolitical risk, you got a hurricane, you got China with stimulus. Those should all put oil to the upside. Now the Saudi Arabia news comes out and kind of throws a cloud over everything, right?
Exactly. This Saudi Arabia news on crude oil is a pretty big news, because if they start heading for market share and not $100 a barrel like their past had been, or at least 80 or 90, they liked it above 80, let's be serious, but if they're going for market share, that means they're going to put the hammer down on crude oil. Watch for crude oil to break hard here, Tom, if that story persists in the market. It could be an ugly chapter here for crude oil. I mean, good for U.S. consumers, good for inflation, Tom, but not good for energy stocks.
Yeah, maybe that's the outlier that, demand's kind of waning a little bit. Everybody's talking about maybe a pullback in the economy and demand. But at the same time, Saudi Arabia coming out there and U.S. production at record levels also maybe capping any upside. So we'll continue to watch that stuff. All right, great breakdown for us. Thanks. That's Kevin Hincks, co-host of Fast Market.